Hey guys, Mike here. So today definitely was not an oh boy, but it was more of a ooh boy. Yeah, kind of a red day in the market there. And finally, should we be surprised? No, because what have we been talking about on this channel? A lot of mega cap stocks are going into supply zones, right? Where sellers are waiting to take profit because they've moved up heavily for sure, right? And so that's normal. A lot of stocks also are coming into weekly expected moves that the option market expected. They're hitting them on Tuesday, not Friday, though, right? And so you tend to have some slowdown on that. The other thing is going to be what? It'll hang over our head until it's done. The debt ceiling, right? It's all over the place like a big old yo-yo. We're making progress. We're not making progress. Oh, wait a minute. And so that's what these people do. All right. And I'll leave that at that. But I'll show you the charts to kind of show you what I'm talking about with the supply zone and stuff. But the other thing is we actually did have some good news as far as for the economy this morning. Went to the wayside. Also, I'll talk about one sector that, or one bill in particular. It's definitely going to cause a lot more people than I thought more of a problem if we do go into a recession and people start losing their jobs. And I also made a correction of a statement I made. I think it was last week, and I started looking at the charts. And I'm going to make a correction and show you where I made my mistake on that because I don't like to do that. So I'll show that to you. And it's kind of interesting when I start looking at it, how similar it is to what we're going through now. As you can see, we had economic data come out. It says U.S. economic output reaches a 13-month high in May, right? You go, well, that's great. And there's the S&P Global's flash U.S. composite PMI, right? It captures activity in both the services and manufacturing data. And you can see it came in at 54.5 in May, up from 53.4. Of course, when you look, what actually, made this go up? Well, it's the services sector. Shocker there, right? And so 55.1 up from 53.6. Now, what did manufacturing do? I can't believe it. It contracted again. And so manufacturing tends, obviously, still is a problem and still contracting, but the services sector, which is what the Fed can't get their heads wrapped around, is absolutely, rocketing. We're spending, right? Now, the bill for a lot of people is going to be a big problem for them if we do go into even a moderate recession, is going to be their mortgage, right? It's the biggest bill we have. And what I was looking at, if you look now, is at the bottom down there, because of the high interest rates and high prices of homes because of inflation, you're looking at a $21,000 increase in the down payment if they make that. But more importantly, 97% increase in monthly payments right now, right? Because most of us did get in below 3%. The houses were way cheaper. And I thought to myself, how many people have actually bought homes since these rates started going up and actually got to their peak, right? And if you look, we'll just pick like November, December, right? And maybe before that, but I'm going to go with November, December. And you're looking around 25 million homes right there that were bought since we know we were at these, peak rates and everything. And the reason why, one, the rates are going to stay up. We know that. Two, if the Fed holds especially. Two, the prices are not going to drop in a lot of areas that fast, especially like someone in Florida or something like that. I mean, there's other areas that will. But it's simply because of supply. I mean, the housing inventory, just look at this. This is 5 years, right? It goes over a 5-year period. If that was a stock chart, that's not a stock you want to be in, right? I mean, and you can see it's finally starting to somehow try to turn up right here. But when you take an even larger view and go back to 07, look at the inventory. I mean, oh my goodness. I mean, it's just been shrinking every year since 07, right? That is amazing to see that. And, that's part of the reason we obviously had housing boom and everything else. The other reason was, which is amazing to me, was the Fed. Obviously, look at this. Even during that time frame, they were sitting there behind the scenes, which we really didn't know it, I guess. And I guess we really didn't know it, buying mortgage-backed securities, right? And they originally did it in 08, supposed to go to 2010 and stop. And you see they kind of did. And then all of a sudden they said, 2013, this works out good. Let's just keep on doing it. And end up buying up to around $1.8 trillion worth. And then 2020 hit again, and boom. And they do this to obviously, it's a form of liquidity and everything, and it props up the housing market and puts confidence in the people and makes it easier to buy homes because it actually does help with the interest rates as well. And before we continue, guys, if you're getting anything out of this, please hit that like, subscribe button. I really appreciate it. And think about sharing the video. And if you like the content, think about subscribing. And so again, it's not going to be a problem until it's a problem, right? Until people actually, lose their jobs. If that does happen. If it doesn't happen, it ain't going to matter. But again, that's the biggest bill. Student loans will kick back in eventually, which make that even a bigger problem. But we'll see, right? I mean, that's just how it works. And unfortunately for them, if we do hit hard times, they're really going to be in tough times because I was in the real estate business back in 08. And I can tell you, if you get kicked out of your house and lose your mortgage there, the rent's going to be way higher than your mortgage because the real estate apartment industry is like vultures in bad times. They absolutely skyrocket prices once they know people are getting booted out of their houses. So just FYI on that one, save up for a rainy day. All right. Now, where I made the mistake was last week. I think I made a statement that the market never sold off right before have a major sell off before the recession hits, right? The market's never done that to us. Well, then I went and looked back and I was like, I knew in my head, I was thinking that's not true. But if you look here on the left, you have the dot-com bubble, and then on the right is where we're at now. And you kind of look at them and say, well, those look pretty similar, right? And if we look at this, the grayed out area right there is a recession. Again, we won't know that happened until like a year from now, right? But the market actually did sell us off quite a ways in advance. Sold us off about 200 days in advance. Went down about 29% right there, right? And then when we come over to what's happening currently, obviously, the market sold us off for about 280 days, around 28%. It's only about 1% less, right? And a little bit longer. Then had this crazy rally coming up right here and actually rallied about 22%. In a matter of 50 days, so a huge rally right there in a very short amount of time. And then, of course, we got this rally we're in right now, around 21%, about the same, going on for much longer, about 221 days. But then when I looked at it, I was like, you know what? That part right there, that rally, doesn't that look just like that rally? Like right after the sell-off, and then sold back down, and then there's the rise. So in a way, I think I basically measured the wrong rally. I think that's what it looks like, right? I mean, that's kind of what it looks like moving up. And then you see that sideways consolidation period right there, which is kind of what we're in. And then, of course, after that, you have another 33% drop. But, so we'll have to figure that one out and see. But it looks really, really similar to me when I looked at it. And I thought, okay, so yes, we have been sold down before recession. Maybe it was I wasn't in the market back then. I was in college. But maybe we were in anticipation of a rally. If you happen to remember back then what was going on and why it sold off then before we ever even hit a recession, let us know and stuff. But you can see we can definitely have some major moves up right there and consolidation before either another leg down or another leg up. So it depends on how you want to look at it. And what's funny, even when you compare the unemployment rates, like it was extremely low. It was like between like 3.7 and 4% when they were selling the market off in 2000, or crashing the market, I should say, is what they did. And then, of course, now we know what it is, right? Between like 3.4 and 3.9. So, definitely an interesting comparison there, to say the least. Let me know what you think down in the comments. Now, obviously, keeping things simple in the SPY, where are we at again? Right back in the old box, between 3,900 and 4,200. Broke 4,200, couldn't hold, sold off the last couple of days here. And so, again, I'm going to draw a trend line in here. You see we're right at that trend line. So let's see if we start to wedge ourselves back up for another breakout or break down. And you can see, we've gone through this multiple times and stayed in this box. But, right there, boom, break a trend line, move down. Up there, had a trend line, move down a little bit. And so we'll see. Let me know in the comments which way you think we're going and stuff. Now, IWM is still the one to watch because it was actually really green this morning, even when the indexes were red and flat. Right, again, there we are at supply, okay? And so what happens, it ends up selling off today. Not much, though, compared to the other indexes. It was still strong. But if it does bust through that supply, again, you got that big volume gap. It's moved up multiple times. The RSI is over 50. That MACD is fitting across that zero line. So he has the best chance out of all the major indexes to have a big move. Now, Apple, what's one of the things that may weigh on the SPY and the Qs? That double top we talked about, right? Right there, you can see it. It hit it, sold off, been red in the last 3 days, moving down right here. And, it definitely, if you're a bull, want to hold that because you can see that big volume gap, and that's where it left that huge gap when it moved up. And for such a big stock to leave that kind of gap is still amazing to me. But that's the kind of market we're in right now. So, again, if it moves down, starts filling that gap, yeah, the Qs and the SPY are definitely going to be feeling the pressure, let me tell you. Now, Tesla's been on a tear. Broke through the one trend line, heading for another trend line to break, heading for that gap above. Again, it's another one, hitting supply, right? Major supply right here. So what happens when it hit it this morning? Boom, hard rejections will happen. And so I want to see if it starts heading up. This one right here, you can see it's rejected off this trend line multiple times going back through last year. So we'll see if we can get up. It's around the 199, 200 areas where it would be probably when it hit it, but it has to get through that supply first. Again, the RSI on the day looks just fine to me. So we'll have to see. It does lead me to this right here, and I think I found or saw on the internet Tesla's first ad. I don't think it's the first. I think they actually did an ad a long time ago, but this is the one after they announced, what was it, last week, they would try advertising, and this is in Japan, it seems. So check out just a short little clip of this. I didn't nowhere near play the whole thing. The whole thing's 2.5 minutes. This is like 30 seconds.
I'm Felicia. I'm a branch manager in the financial industry. So I'm a mother of 2 young kids, 3 and 5 years old. The technology attracted me. It looked different, it felt different. I would say in many small ways, even though it may not be evident upfront, but in fact the day-to-day drive is one of the smoothest and safest. Every day I have to drive quite long hours. Sometimes it can get very tiring. With the auto steer, I'm able to put my mind at ease. It will warn me whenever I'm getting too close to other cars, as well as keep myself in the lane.
And what I found funny, I think it's a cultural thing. I think, and again, that's in Japan. I've been stationed in Japan. It's definitely a cultural thing. Because I looked up, like, you know, commercials for Ford or GM here in America, and the last GM one I found was where it was Will Ferrell and he was being chased by zombies and stuff. Like, and that's the kind of commercials we get. So, but when I look at that commercial, and again, it's 2.5 minutes of her talking and really going over what Teslas can do and stuff like that, right? That commercial interests me more than zombies chasing me in a pickup. I mean, I'm sorry, but because that actually, I guess I'm more just logical or whatever it is, how my brain thinks. But I'm going, oh, really? It does that? Okay, I gotta look into that. Versus some zombie trying to bite me or something. It's just, I don't know. Anyway, let me know what you think about this stuff. But it goes on for about 2.5 minutes, and we'll see what they come out with for America if they decide to advertise here or not. But it looks like they're going that route. And that leads us into another stock hitting a major supply zone, which is AMD, of course. And so if we can get through there, great. But I'll tell you one thing, this is the most organized move down and move up I've probably ever seen on a chart. If you just follow the RSI on this thing, I mean, look at that. Every time it even touches overbought, boom, it sells off. Overbought, sell off, overbought. So we're going to see, and it's hitting the supply zones, you would think maybe it would come back down again, and then, of course, move back up from there, right? But it hadn't, you know, it keeps making sure it doesn't test out or break the previous low and everything. And then if you just look, you know, over, well, right there you can see the same thing happen. But if you look over when it was selling down, it was the exact same thing. Anytime it would get oversold, it would bounce, right? Oversold, bounce, oversold, bounce, oversold, bounce. I mean, just crazy. And then, I mean, that's just amazing to see, but it's the most orderly sell-off and move up I've seen. So we'll see if it continues to follow that. If it does, we should be going to 125 in about 2 weeks. But, you know, leading us into Google, here's another one, 125, heavy supply zone, right? Selling off now, getting rejected. And again, because it was overbought on the RSI, this is not one of those stocks like Meta and Tesla. You know, I think this one, probably, you know, Amazon the same way. When they get overbought, they aren't some hyped up type stocks. They sell off, right? They come back down into normalcy. The other thing is they hit the golden pocket around 618, 665 Fibonacci level. So shouldn't be too surprised on that right there. That's exactly where that zone is. And the RSI was kind of telling us this was going to happen. When we looked at it, I was like, we're heading down. The stock's still heading up. So, you know, a good healthy pullback is always good, because you're talking about a 20% move up in 14 days. And for Google, that is not normal. So just FYI on that one. Now, leading us into earnings, you can see we had, obviously, retailers today did not go well. Tomorrow we got Kohl's, another retailer, Petco, retail for pets. And then, of course, we'll have Abercrombie Fitch, and then Xpeng for China stocks, which didn't do well today at all. And then the big daddy, NVIDIA. Put in the comments where you think we're going, up or down, right? Then you have Snowflake, put up or down for that one. Elf does beauty and stuff. And then you have Splunk. But NVIDIA is where everybody's going to be looking tomorrow, let me tell you. And then tomorrow, the only thing you can worry about is FOMC minutes at 2 o'clock. And so we're looking at the dot plots. I'll bring them to you, because we know the market loves what? That pause narrative, right? And the Fed presidents are all over the place on this. I think trying to send mixed signals on purpose, where some are saying, yeah, maybe we pause in June. And if we have to, we'll raise again in July. Or, you know, I plan on raising in June, but then maybe we pause in July. And so, again, what's the market not like? Uncertainty, right? That's what this whole, you know, debt ceiling thing is. And though we all know they're going to kick the can down the road, you would think. But, you know, anyway, let me know what you think what the Fed's going to do. Like I said, I'll be surprised if they raise again in June. If they do raise again in June, you got to think that's got to be the last one for sure. But I know, you know, Jerome Powell, he really wants to see, and a lot of the Fed presidents want to see what the lag effect is on all of these rate hikes because they raise them so fast, and usually it's 12 to 18 months lag. And so we kind of got a ways to go to even really see what's going to happen. So again, I think with all the banking stuff, which they backed them on anyway, I don't think that should scare them too much because they already realize they'll just sell them to the 5 biggest banks out there and we'll be good to go. So but let me know in the comments what you think about that, especially what you think about NVIDIA earnings. What's your prediction? Up or down? You give a percentage if you like. I like to see that too. So, if you got anything out of it, guys, as usual, hit that like and subscribe button. I really appreciate it. Think about sharing the video. Appreciate you guys watching, and I'll see you tomorrow.